Good evening. This is Ken Long from Tortoise Capital, August 20th, 2009, with a quick review of an intraday trade in QLD, the 2 times technology leveraged ETF. Gets double the daily return of the NASDAQ 100. And so what we're going to look at here is the RFA continuation. I say continuation because we traded it yesterday successfully, and we were prepared to buy it on strength again today. From yesterday's preparation, we remember that the market health check said that we still had potential for a 3% upside move in SPY to test 102, and that we were prepared to buy tactical momentum if it was heading up, or tactical weakness if it was failing. We were ready to go short because it was perfectly positioned at the midpoint of the Williams %R. So this is the opening here, and what we're looking at is QLD on 5-minute charts, SPY on 5-minute charts, and I like to array them in this fashion so that I can see if there's parallel price action. If one is diverging from the other, that's an important tell. I'm also going to show QLD on 1-minute charts because it's a little bit easier to see the move that we're going to describe here in a minute. So the vertical blue line is the opening. And what we saw immediately in SPY was a minor gap up, followed by power immediately, taking out the yesterday's afternoon high. As soon as it starts powering north, that's enough indication for us that tactical momentum is here, the direction is up. I see that QLD, the technology, is up, and it's up even further. And on this expansion bar here, we buy it. We don't get a very good fill. We get filled at 44.60. We actually put the order in at 44.45, and with slippage, we got an unusually poor fill. But that's what you get. So when we saw the fill at 44.60, we're going to use a 10-cent trailing stop, so that's at 44.50. I'm hoping to get a retest of 45, a nice round number. And so we're going to risk $250, or that leaves our position size at 2,500 shares. It powers straight up. It gets up as high as 45.10 and then starts failing. SPY is already failing faster. As you can see, there's one candle of fail in QLD, but we've already got 2 candles of fail in SPY. So that to me looks like the market put in a nice early morning bounce, and that we're going to get some retracement here. Don't know how far back, but going from 44.60 to 45.10 was 5R in hand. We wait, we lose 1R, it gets to 45 even, and so we exit, and that leaves us with a fill. We actually got a fill at 45.01, and netting 41 cents per share, or 4.1R, and on 2,500 shares, that nets us $1,000 for about an hour's, maybe half an hour's work this morning. Now here's the move in 1-minute bars with the yellow box, translated for the same period of time, and you can see our fill at 45.60, the 10-cent trailing stop. A nice, powerful, orderly move all the way up. 45.10 hesitates. Fail, 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 fail. That's enough. Out. And cash in 4R and in order to feed the dog. So that's an intraday move. Ready, fire, aim. We are ready because we've done our preparation work, and we have planned out what we're going to do if the market goes up with power or down with power. We've identified our target. We do a quick check in the morning for price action. We see consistency between the indices. We act quickly in a risk-managed way in our normal position sizing. We have an expected target. Fortunate enough, it hits it and acts in a usual way, and we realize we have an opportunity to cash a normal trade for that morning. So that's the ready, fire, aim technique. And I will say fire before aim because we fired, saw the fill, and then put the adjusted stop in at 10 cents. We weren't sure where that was going to be until we actually found out what our fill was. So thanks for your attention.